Hello and welcome back everybody to my weekend update on the financial markets. My name is Jens. I have 7 years experience trading the markets so far, and I make these videos to help you understand price action and how to behave in the markets to profit from it. I will cover today S&P 500, US oil, gold and Bitcoin. Let's start directly with the weekly time frame and S&P 500. Here you can see that everything is bullish so far. We are above 200 moving average, above the weekly uptrend line. We broke the last all-time highs from January 2022 to the upside, and so far S&P 500 made on a weekly one impulse, one correction, a second impulse, a second correction, and now is in the third weekly impulse to the upside. And currently it looks like we are on a daily setback. So let's drop down to the daily time frame. Here we can see the last weekly impulse a little bit more in detail, or like my guess is the first half of the weekly impulse. In this we had one daily impulse, one daily correction, a second daily impulse, a second daily correction. So at the moment I think we are about to end this second daily correction and start the third daily impulse inside this weekly impulse, and that could be by good chance the last daily impulse. So I want to use that. How do I want to use that for my advantage? Let's drop down to the 4-hour time frame to see it more in detail. In a 4-hour time frame you can see I was able to draw a 4-hour blue dotted up downtrend line here to mark this correction. We met the 4-hour support zone. We broke it slightly to the downside, but then luckily our daily uptrend line was in the way and stopped price from declining further like expected. Then price reversed there and broke this 4-hour support and resistance zone again to the upside, which is bullish. So what do we do now? I want to do two things. I probably will open up on Monday next week a position of 10% of my account balance into the S&P 500 ETF. That's additional to my 20% allocation I have already right now in the market. So in the end I will end up with a total of 30% invested in the S&P 500 index. The second thing I want to do is I will open up a trading position with 1% of my capital at risk, and I would lose this 1% if we see prices below probably $5,370 roundabout. I will work with a knockout certificate. If you don't know what this is, inform yourself about it and then decide if you want to use these kind of things. I find it pretty useful because you can exactly stop the amount what you are losing if the trade is not working in your favor. So I can calculate it pretty accurately. So 1% I will lose, and if we see rising prices from here like expected, that would favor me a lot. So that's my expected movement. So far the bullish side, but like Charlie Munger says, always reverse or invert, always invert. That was what he's saying. If I would see a break below these last lows, a retest, then we will see probably prices declining further, maybe to our last daily support level, maybe even lower. We don't know. There would be that 0.618 Fibonacci retracement level, which is pretty often the stop for prices to decline, and it would also align with this daily support zone. And yeah, but that's the bearish case. In this case I would think about selling this 20% of my position, so no S&P 500 position at all, and wait till we see prices bottom out around this level and then find a new trading opportunity to the upside, or even profit from falling prices via short products. But I keep you like always updated on my actions in my next weekend update, so stay tuned and let's continue with US oil. Here we can see US oil on the monthly time frame, where each candle represents 1 month of price movement. So a pretty long lasting chart back in the days of 2005. And yeah, what we can see here is a monthly downtrend line and a monthly support and resistance zone, and also a 200 moving average of the monthly candles. And what's the positive thing? All three criteria are broken to the upside currently. So we had this break, and afterwards we dropped for that down to the weekly time frame. We moved into this consolidation. I was able to draw a weekly orange downtrend line above this price movement, and this downtrend line got broken to the upside on April 2024, so not that long ago. Price got and get supported by the 200 moving average on the weekly, and we are still above the monthly support zone, which is all pretty bullish. Now I want to show you something on the daily time frame. On the daily, you can see we are moving into a kind of a triangle, and the waves are getting smaller and smaller eventually till we end up in this peak, and sooner or later we will have to break out either to the upside or to the downside. That's a typical pattern. You have seen on the higher time frames that I'm overall bullish because we have broken long-term lasting downtrends to the upside, and this is now the consolidation of it. So I'm pretty sure that we will see the breakout to the upside, so I prepare myself for that. After breaking this daily downtrend line, I opened up already 20% of my account balance into a position of US oil. I closed this position at the moment where price dropped below that. I predicted also if we don't make the breakout here and we break below this daily support zone that we will see probably lower prices, and that was the case. So I sold my US oil position, and now I have no position at all in this market, which was a good choice because from there on price declined further. Now it's currently testing the weekly downtrend line in combination with the monthly support zone. This could hold and reverse, but it can also drop further all the way down to this daily white dotted triangle uptrend line and reverse from there. Two possibilities in my opinion. The third would be the most unlikely, that we will see prices below that, a retest, and then continuing lower prices. I don't know what should happen in this world that this is going to be the case. Probably no good news for the world, but yep. Or maybe we found an energy source and nobody needs oil anymore. That would be probably the good scenario. But let's focus again on the chart and price development. On the 4-hour time frame, you can see I was able to draw this 4-hour blue dotted downtrend line, and that could be an indicator. If we get above that in combination with this 4-hour resistance zone, we break it to the upside. That could be a sign that we found here the bottom and bottomed out, build a stable formation, and we will see again rising prices. This scenario I would probably use for building up a more active position via knockout certificate, like I want to use also on the S&P 500 trade, because you can make this stop mark, your stop loss mark, directly below this formation, and then you can decide how much of your capital you want to lose. I wouldn't recommend less than 1 because then it's not significant enough, and I wouldn't also recommend more than 3% because that would be a little bit too risky for the portfolio management. Yeah, you can also decide to load up via ETF or do nothing at all. That's your thing. I will probably make a more active position, not buy the non-leveraged ETF again, and I will then hopefully see prices right higher. Maybe at this downtrend of the triangle, I would scale my position a little bit down in case we bounce again and see again a reversal. But if we see one day a break, but I will cover that in later episodes, if we will see a break to the upside, that will be the point where I would get pretty I would get the fear of missing out, I can send you that, and then I would make different trades and also position myself in leveraged ETFs, etc. But we will talk about that if that happens, and so far I stay cautious. I will have an eye on that, and yeah. Opportunity A, we break out. I make a trade via knockout certificate with a stop loss below this range, or we will see prices decline. Maybe it could look like that to this point, and here I would like to load up a position, probably then leveraged ETF in combination with a knockout certificate, and my stop loss, or the point where I would get also out of my ETF, would be if we see prices below this last low, because that would mean 0.1, 0.8 that we lost this triangle to the downside. And yeah, a lower low is never a good thing for a bullish for searching for bullish opportunities. So that's my view on US oil. Stay with me, subscribe to the channel so you don't miss the next update, and I wish you good luck with this asset class. So like with the next one, gold against the US dollar, again on the weekly time frame. Here you can see that we are above the monthly uptrend line, the weekly uptrend line, and the 200 moving average. Also, price was able to get above an often tested weekly resistance zone. After that, price had a steep rise, and after that steep rise, we can see it better on the daily time frame. We went into this sideways consolidation zone. The white daily uptrend line is still intact. There's a secondary white dotted uptrend line that's currently getting retested. And yeah, this sideways consolidation zone, I thought myself, man, on sideways consolidation zones, it's really hard to get an entry. Just open up 10% position in it to get a foot in the door, so you don't miss out on rising prices. So I did. I bought 10% at 2,366 US dollar per ounce, and I was pretty happy with that, as we have seen that we had a breakout. Now that we get to this breakout of this range, I want to drop with you to the 4-hour time frame, where each candle represents 4 hours of price action, so a little bit more short-term view. Here we can see where I bought. We had this steep rise, then a really massive and fast sell-off. Because a break to the upside is pretty bullish, but if you see prices come back down that fast, it got me a little bit concerned. Let's say it like that. And yeah, then we have seen this pullback to the breakout zone, and then again a massive sell-off. And I don't want to risk it to lose a lot of money, so I sold gold. At the moment, we have seen prices at my entry level. I got the message on my phone a little bit later, so price has risen after that again. So I'm out with, I don't know, 0.4% of profit, nothing special. And yeah, then we have seen again lower lows, but the white dotted uptrend line in the combination with the 4-hour 200 moving average hold price so far, and it bounced and rises again. What's the good thing about it? We have the opportunity to look at this blue dotted 4-hour downtrend line. We had so far an A, B, C correction. Maybe that was it already, and we'll see prices below this white dotted uptrend line. So in this case, I would like to see maybe again a test of this white uptrend line, then a break above the blue dotted downtrend line, a retest and a break of the retest to the upside. Then I would be again bullish for gold, and I would think about getting in with a knockout certificate with a stop loss or below the last low. Again, probably 1% of my capital at risk. And I would also open up maybe again a non-leveraged gold position via ETF, or a 2x, 3x position on gold, because yeah, like you could see on the weekly, this is a long-lasting sideways movement that got broken to the upside. This has potential to go on for months, when not even years. So I want to be with it on board, and that seems to me like a good possibility. That's the bullish side. Let's look at the bearish side. Let's turn that one to red. If we see prices getting below this last low and the white dotted uptrend line, that would be pretty bearish and would mean that we will retest with a high probability the lows of this range, when not even possible the daily white uptrend line. That wouldn't be horrific, because the uptrend would be still intact, but and I would use this if this holds and we see creation of a bottom formation and then a break of that to the upside, I would definitely get positioned in it and would use that to get cheaper in the gold market. But here, I think the even more bullish case would be that we will see the reversal here and from there on new all-time highs. What happens if we break this white daily uptrend line to the downside? I don't think that I need to mention that. That would mean that we will retest all the way back down to this breakout zone, or this often tested resistance zone, then turning support in combination with the weekly orange uptrend line, and there would be then the last hope for a price, and there we should at least reverse. But that would be a really good spot to get in gold because it's a little bit expensive at the moment. But we will see, and I will for sure update you with my next episodes every weekend covering these 4 assets. You can count on me, and if not, I will inform you if I'm on vacation and have not the capacity on my time to make a video. If you have any questions, by the way, on the markets, on TradingView, the platform I'm using, or how I learned all this stuff, you can ask me in the comments and I will answer you as good as possible. Let's switch now, after we covered all I wanted to tell you on the gold market, to another really high valuable asset, to Bitcoin against the US dollar. Here you can see the Bitcoin on the weekly time frame. We are above 200 moving average and also the monthly and weekly uptrend line. The weekly uptrend line got broken to the downside, what a little bit surprised me because I thought this one would have been the weekly low of this correction, but it wasn't. It wasn't a BC correction, and because of that I think this is now the new weekly low, and I think it's over because we moved heavily to the upside after that. Let's look at the daily. On the daily time frame, you can see that price moved a while sideways here at that point where I bought 20% of my account balance into Bitcoin. I already thought the correction would have been over. It wasn't. It moved further in this sideways movement and then broke below this daily support zone, and then also the weekly uptrend line and 200 moving average to the downside, which was a bearish sign. And I said, if this correction to the upside holds and we see an resistance here and price reverses back to the downside and we get below this low, then I would sell my 20% account balance in Bitcoin. Luckily that didn't happen. We have seen price rising again above all these criterias, and then I said I would like to even increase my position if that's the case, and I did with 10% of my account balance. So in total now 30% in Bitcoin invested with my YouTube portfolio. Since then price has risen further to the upside. My next goal is to see Bitcoin rise all the way up to this upper level. What happens then? Maybe we'll see again a little bit of resistance here and see a pullback, maybe a more calm one to this level or even a bigger one to retest again the weekly uptrend line. But lately then price should not break below this uptrend line again. That should hold, and then sooner or later we'll see the breakout above this upper band of this sideways movement, and then a correction to the breakout zone, and then new all-time highs from there on. Probably I would add another 5% allocation to Bitcoin if we see the outbreak, maybe in combination with a broken correction to the upside. That would be a bullish situation where I could imagine to scale a bit up. The bearish scenario would be that we see price fall below the weekly uptrend line in combination with the 200 moving average and also this daily support. That could be bearish, and I would sell my 30% position in the market if we see a drop below this weekly low. That would mean that we have no support left and we will collapse in price, probably around to A, this area where we have a little bit of resistance but not that much, B, to this resistance where we would have a lot of conflicting market participants that said there maybe Bitcoin is again cheap enough to stop prices from declining further, or see the worst option all the way back down to the monthly uptrend line. I don't think that A, B, C of these negative scenarios are really likely. I think more likely is that we will see sooner or later the breakout to the upside and continue the overall uptrend. So stay bullish for Bitcoin. On the 4-hour time frame you can see that where I bought exactly. I bought also after I have seen a rise above the 200 moving average on a 4-hour time frame, and then we broke this resistance to the upside. Then we had a smaller pullback to the 4-hour support level, and the idea was that it could be a good idea to open up a long position to ride prices higher and have the stop loss below this correction. That would have been a good idea. I haven't done it because I was already invested with 30% of my capital, and there are no knockout certificates for Bitcoin, at least at the EU. And maybe if you are a US citizen, you had the opportunity for that. Like I can only congratulate you if you've done that. But otherwise, I'm also pretty happy with my actual position. Here, at the moment, I don't think that there's something in for short-term traders. I would wait till I see a real break to the upside. If you have no position yet at all in Bitcoin, maybe like I did it with gold, you will get a foot in this market by buying a position inside this range before the outbreak and then scale up to maybe some more percent of your account balance if you want that, because it's all your own decision. I'm only telling you what I do in the markets and what I think is a good idea to behave. If you have any questions or recommendations or other opinions, drop them in the comment section and I will answer them as good as I can. That's it for Bitcoin and my two scenarios, one more likely than the other. The more likely one is that we will see a break to the upside, a retest, and then further movement to the upside. And the second scenario, the more unlikely one, is that we will see a break of the uptrend and prices below the last weekly low, and from there on lower prices. And at that point I would get out of all my active positions in Bitcoin. Let's switch to my Excel sheet where I have all the historical data of this YouTube account, so you can see what I have done in the past. Here you can see the historical data of this YouTube trading account, and my last two changes have been the selling of my long-term 20% US oil position with a minus of 0.56% and selling my 10% long gold position with a profit of 0.34%. So total of 103% account balance. So a little bit in profit with the account, and have at the moment a massive cash position that I will use to increase my S&P 500 and the Bitcoin position, and also get back in the markets of US oil and gold if the signs are fitting to what we analyzed together in the charts some minutes ago. So that's it for the weekend update. I wish you all the best, and we're here and see us next time.